I was recently at a conference in Austin, Texas, and we were meeting with some of the best economists around the world. Now, there's a lot that they discuss with respect to not only where the economy is headed, but also investments to consider. That's what I want to discuss right now. Starting off, we're going to discuss number one, economic and stock market risks. There was a lot to discuss at the recent conference that I was at. Now, like I said, we were bringing in some of the best world-renowned economists, and we're discussing all the different elements of the economy and where we're headed. But the one topic that everyone wanted to come back to were bonds. You see, the bond yield is really what's driving a lot of our growth, or lack thereof, and what is actually driving a lot of the stock market as well. So when we have the bond yields go up, well, that generally signifies that inflation is here to stay, and then the US dollar starts to go up, and then it spirals to seeing a sell-off in the stock market. But what's going on really is the fact that we need to fund our government. And so Janet Yellen is doing a lot of work to fund the government through the issuing of bonds. Now, we know that there's a lot that is riding on this. So when we talk about this, if there's a lot of buyers from around the world that are stepping up to buy our bonds, well, then we don't actually have an issue, and you actually will start to see bond prices come up. Now, however, if these other countries and large institutions are not buying our bonds in the same way, well, then we're going to start seeing bond yields come up and the prices start to go down. Now, that could really start to mean a couple things. First of all, that inflation may be here to stay longer than what we had anticipated just even a year ago, but it also may mean that the US dollar starts to go up as well. And when that happens, then you can start to see a sell-off in stocks. So now you can actually understand why we've been talking a lot about these yields. There's the however though. Janet Yellen is doing what she can to fund the government, and she's doing some manipulation of what types of bonds she's issuing to do that. Now, Jay Powell, the Federal Reserve Chairman, he wants nothing to do with those different elements. He wants to make sure that we are trying to keep inflation in check and we're trying to keep employment going. Now, what he has come out and said last week is that he's going to be basically flipping the script. Up until now, it's just been about inflation, and he knows that that's going to be the wrong element going forward. So he actually may cause more inflation to happen just by the fact that he's stopping some of these runoffs of the bonds that they've been doing off the balance sheet. So they may actually be buying more bonds from the Treasury, which actually will be a stimulus type of effect. So that may be very helpful coming into the election. But the other elements that are going on here is that if that's the case, then we may not see inflation come back down. So that could be good in the near term with respect to a lot of different stocks going up. But also, if that happens, that could provide a catalyst for recessions in the future. So we don't know quite when that would happen, but a couple of economists actually did suggest that we are either now in a recession or that we are coming up to a recession. And if we tie that with some of the lead index and knowing that we are going to be in this environment and it's changing now, that is going to be more of a lead 3 scenario, that we see growth starting to slow in our economy, but inflation continuing to pick up. Well, now we can start to see that there may be some room for other investments in the portfolio. So a lot that we talked about, but again, it all came back to bond yields. Number 2, portfolio changes. There was a lot that we discussed at the economic forum, like I mentioned, but the one element that we really started diving into is that there is pockets of growth that are happening and at a faster pace than other areas, and that is emerging markets, China, and then a lot of actually European markets as well. So when we take a look at portfolio changes, we're actually continuing the addition of more European investments, emerging market investments, as well as the continuing of the investments of what we're doing into some of the growth areas of the US as well. So when we take a look at the outcomes, when we take a look at where we possibly could be headed, these all can be great places to be. So growth, really, when we have an environment that the economy is not quite slowing, but just not growing that fast, investments that are growth oriented actually can do somewhat well in that environment here in the US. But what we also are seeing, that if we start to get a huge pickup in China with respect to their industrial manufacturing output, well, that's going to benefit the entire region. And there's a lot of other emerging markets that are tied to China for some of their growth, which could be a huge boom to come. So if we take a look at that, we take a look at the fact that there's been a lot of areas in the overall European developed world that's coming out of a recession, well, then we can start to see how we can broaden out some of the investments. So no longer do we have to be just in cash or cash alternatives, we can be into many different places. That was one of the key takeaways from this weekend, and it reiterates what we are already doing with the portfolios. Number 3, wealth management and advanced planning. I want to take a moment and step away from the tax part of it that we've been really spending some time on recently and talk about another element of the economic form, alternative investments. You see, generally speaking, those are really to come into the portfolio and come into what we're talking about with the economy and stock market risks. But when we talk about alternative investments as an overall way to help to lower the volatility, increase the returns, and how that can actually help your overall wealth plan, well, it needs some consideration. Now, that's not always going to happen that way. So yes, alternative investments are designed to help reduce some volatility, to increase the returns of the portfolio, but we need to really be aware of what types are going to be beneficial. So here's the thing, when we take a look at alternative investments, we have anywhere from real estate to privately held companies that we can be investing into, or even loaning to in the form of private credit. Now, what this does then is provide alternatives, sometimes even cash flow to the portfolios. Now, the portfolio then obviously helps to provide the means to help sustain, support, and grow the overall wealth plan. So that's why we want to be talking about it here, because that's a great element that we want to be discussing in the future. How can we use your hard-earned wealth to help grow, protect, as well as transfer of all of that to the ones you care about? So a good overall wealth plan actually does start with some of the investments, and alternatives have been such that now they're getting to be liquid, easily accessible, and to the point that now they can be very beneficial to the portfolios, where in years past that may not have been the case. But again, it's not every alternative investment is going to do this, but there's going to be ones that may be right that we want to be talking about as part of the overall portfolios that add to the advanced plan that you have. Number 4, our second opinion service. As part of the second opinion, think of it like a stress test. Now, what this is going to do is take you through a series of questions that's going to help guide where you're at today, guide you to where you want to go in the future, and then to see if there's any gaps that exist. Now, stress test is not just for investments, but really for the entirety of your wealth plan. And when we do that, we can actually determine where the gaps are and possibly the direction on how to close those gaps. If you or someone that you deeply care about would like to go through a stress test, we invite you to have an initial, just introductory call. Please click the link below, put in your contact information, and we'll be happy to reach out and schedule that time. Take care.